Ladies and gentlemen, I'm excited to share our 2022 results today with you. Overall, Volkswagen Group delivered a robust performance in 2022, with profitability improving and a record of 572,000 all-electric vehicles delivered, despite ongoing supply chain disruptions and headwinds from higher raw material and energy costs. We are operating from a strong financial position with a solid bottom line and have excellent teams who are driving the transformation forward. Thanks to everyone who contributed to these compelling results and to the progress in implementing our strategy. Our performance last year demonstrates the resilience of the Volkswagen Group. Significant supply chain challenges led to a decline in overall deliveries to 8.3 million cars. However, sales revenue went up 12% year-on-year to 279 billion euro. Our order bank remains at a high level with 1.8 million vehicles in Western Europe alone. Operating profit before special items increased to 22.5 billion euro. Continued pricing and cost discipline and a stronger mix compensated headwinds from higher raw material cost versus 2022 of about 8 billion euro and the burden in the magnitude of 2 billion euro resulting from the hibernation of our Russian business. Overall, the net liquidity of the automotive division at the end of December 2022 increased to 43 billion euro, mainly driven by the inflow of 60.1 billion euro from the successful Porsche IPO in September 2022. Even more important, in 2022, the group made significant progress in implementing our strategy. The ramp-up of the production of battery electric vehicle continues to accelerate. In full year 2022, deliveries of BEVs were up by 26% and the share of group deliveries increased to 7%. We launched the ID. Buzz in our Hanover plant and the locally produced ID.4 in Chattanooga. We launched the group's battery company, PowerCo, and a partnership with Horizon Robotics in China on assisted and highly automated driving. We're continuing to build our global presence in Europe, China and North America. And with the very successful Porsche IPO, we increased the flexibility in financing the transformation. Let's look ahead into the year 2023. We operate in an environment that is still impacted by supply chain shortages. However, we expect these shortages to ease and the supply of semiconductors to gradually improve. Simultaneously, the economy is impacted by rising inflation and interest rates, leading to a weakening of global demand. We have to prepare for that accordingly. Good news is, we can drive our transformation from a position of strength and focus further on executing on our strategy while concentrating on the most lucrative profit pools and regions. With our high order bank and easing pressure in the supply chains, we expect that the overall vehicle deliveries will increase to 9.5 million vehicles, driving a strong 10 to 15% increase in sales revenue in 2023. In terms of operating result for the group, we forecast an operating return on sales in the range of 7.5 to 8.5% in 2023. We expect a strong increase in reported net cash flow, and a net liquidity is expected in the range between 35 and 40 billion euro. It will be important to adhere to our pricing and fixed cost discipline in an economic environment characterized by easing supply issues and increased competition. Despite all these uncertainties, we continue to implement our strategy and trust in the group's ability to transform successfully in a challenging environment. Thank you very much.